Oh man, so markets and Bitcoin have hugely flip-flopped here within the daily candle. What is going on? At one point, it looked like we were going to break a key level and then the bulls stepped back in this video, I'm going to break down exactly what is going on with wider markets, what is going on with Bitcoin, and where could we be likely to be headed next, because we're forming some critical patterns now, and it's just a matter of time before we get a huge move in one direction. So we're going to break down what I think in the charts, and we're going to get into all the different macroeconomic elements as well. So this is your one-stop shop, guys. You will not need another Bitcoin video today. Smash on the like. Don't forget to subscribe. As always, if you want to buy any cryptocurrencies, you can do so using BYBIT or BitGet. Links in the description. As you can see here, this is the main chart we've been monitoring. I'm sitting here on the daily chart, and what you can see here on this daily candle is a big candlestick to the downside. Look at that wick. Look at that wick. This wick today took us all the way below that level. We fell below that 18,700 level. We were as low as 18,650. Then the bulls have stepped back in, and now we're back above 19,000 in what has been a good, strong intraday recovery. But what is going on? Why is this happening? If we head on over to Fear and Greed Index, we can still see fear is in the market. It's 23. Okay, so extreme fear in the market, and we need to be very cognizant of this. These are the moments we want to be pragmatic, and we want to be doing what others are unwilling to do, which is accumulate and hold conviction. Do not panic sell. But if we head on over to the US 10-year, you've seen a nice big spike here. This is very interesting. So you can still see this is very high, which is showing a risk of mentality. Initially in the pre-market, we were down. We were in the red. And then you suddenly saw a reversal back into the green. And now the US market, similarly, are up quite positively, up 0.9% here on the NASDAQ, S&P up 1.3%, and the Dow Jones up 1.3%. So we're finishing this week off pretty strongly. And the main narrative has been two things. One, strong company earnings. Overall this week, with some big hitters producing earnings, the companies have done pretty well. And that's given markets confidence that maybe we're not heading for a deep recession. Now, I'm not convinced by that. I think, some companies will continue to provide good earnings because they're able to pass on prices to consumers. But at the end of the day, the markets are still pretty weak. So we need to keep an eye on that. But the other thing we're seeing comes back down to the dollar index. And we need to bring our focus back to this dollar index. And then look at the dollar index. Exactly the opposite of what we just shared on Bitcoin. Bitcoin opened up down, recovered to a green candle. Dollar index was soaring high. It went higher than this little high here, or about the same, okay? Then it got rejected. Now we're in the red here on dollar index, having a cooling off. And it looks like we might want to come back down to our trend line, which is very interesting. And this is going to be huge, because if we can see this rotation across on the dollar index, remember, Bitcoin is inversely correlated. If this dollar index curls over, we've already seen a high. We've seen a lower high. If we can curl over again, this is really good news, right? This means we could be forming a really inadvertent head and shoulders pattern here, breaking to the downside on the dollar index. And that could give us a meaningful rally on Bitcoin. And this is one of the scenarios I'm going to show you, and something we've been talking about over the last few days. Because Bitcoin's in this precarious position. It needs to make up its mind either way. But this is going to be our lead measure. This dollar index right here is what's going to explain what's going on. If I bring out the weekly, I'm going to zoom out to the weekly, bring out the weekly EMA ribbon here on our dollar index. Look at what we've got here. We are hugely extended from our EMA ribbon here. So even playing out this head and shoulders scenario and coming down to our EMA ribbon all the way down to 108, Bitcoin can benefit from this, okay? Bitcoin can benefit from this and have a meaningful rally on a weekly time frame. But that doesn't mean we're out of the woods yet, because dollar index is still above its EMA ribbon. So when you zoom out, what I'm trying to explain here is the risk-off mindset is still a powerful move here on the weekly. Until we lose this on the weekly, we cannot change our mind about Bitcoin going to another bull market, okay? So people are looking for 60,000 Bitcoin, 70,000 Bitcoin. I'm sorry to say, but that's a far longer way, right? That's going to take a while. That's going to take for this graph to flip. So let me zoom out. Let's just watch this for a second for those of you who haven't seen this before. We've shared this a few times on the channel. Every time dollar index gets rejected from its high, it flips its weekly EMA ribbon bearish, and it has an extended move to the downside there and there. These correlate exactly with a huge move for Bitcoin into its bull market. Okay, now currently you're seeing the opposite. We're in our bear market. Dollar index has not just gone past these, but exploded past the previous peak. This peak was for March 2020 during COVID. This peak was the previous bull run. This was back in December 16 going into 2017. Okay, now we're not even having a relief rally. That's what I'm saying. What I'm saying is we could have a relief rally as the dollar index just comes to call off to its EMA ribbon here on the weekly chart. But that's enough for Bitcoin to have a big move. So let's get straight back into the Bitcoin chart, because this is the pattern I'm monitoring. Okay, Now, there's two things I want to show you. So this pattern here is the first pattern which we've seen, okay? You've got this expanding, broadening wedge. Now, these most of the time are a continuation pattern. If you don't know what that means, again, check out my course, ijaz.uk/TA. It's free. Will not cost you a penny. You sign up to Skillshare, and then you watch it for free, and you take notes, okay? This was going to be $1,000 course plus. You're going to get it for free. You'll learn all these patterns, okay? Now, this most of the time breaks the downside. This is what I've been wary of. If we break that 18,600, 18,700 level and break to the downside like my diagram shows here, we've had this drawn since mid-September, okay? So this is one of the patterns. Now, the other scenario we're in is this pattern which I've been sharing with you, which is our descending triangle. Now, I'm going to pop down to the daily chart to make things a little bit clearer. So this is that descending triangle we're in. But watch what happens when I zoom in. Within that descending triangle, we are now forming a bearish head and shoulders pattern. And this is what we were breaking from. I tweeted this morning, so make sure you follow me on Twitter. Make sure you're in the Telegram group as well, because I give those updates to you guys quicker than I can make a video, right? By the time I posted a video, I've rendered it, I've put it up on YouTube. You can get the updates directly on Twitter. You would have seen this pattern hours and hours ago. So you saw that we did break to the downside, okay? But look how the ball stepped back in. That is because of the flip. And the main macro reason we're seeing that dollar index flip, we need to understand that the Fed are now starting to become worried that they're tightening too much. And this is really, really important. I know this is boring for a lot of you guys, but we need to understand. Remember, we said that markets historically bottom and will start improving when the Fed decides to pivot, when they flip-flop, when the Fed goes from tightening to loosening again, or even tightening less, i.e. they've made the decision. I'm going to explain that in a bit. Even if they decide to tighten less, markets will take that as a positive and they'll start to feel buoyant again. That is when we can start to see our rotation. And before then, that I want to be in the market. That's why I'm in the market right now. Because the Fed can make a decision at any moment. I don't think it's going to be the next meeting, but it very easily could be the meeting after that to start flip-flopping and pivoting their decision. And when they do so, this market, in my personal opinion, will rebound very powerfully, very quickly. And I don't want to miss out on that alpha. I want to make sure I'm in the market ready for that, which is why I'm accumulating my high conviction plays now. Now, what we're seeing when the Fed officials have been speaking this week, there's been a mixture, but some Fed officials have started talking about the possibility that they're afraid that we could over-tighten. We over-tighten the market, we drive ourselves into a deep recession, and therefore some form of stagflation. That is not good. But that is good for markets, because if that's on their mind, that could give us a clue that at least in their meetings, they could be discussing it. And if we head on over to the Fed Rate Monitor tool, what you'll notice, this is based on the CME futures. It tells you what percentage of the market have priced in what rate hike. So we've been monitoring this a lot on the channel. And as you can see, 97% of the market is pricing in 75 basis points. That's not changed. But what we have seen is that markets are not pricing in 100 basis points, which is good. Okay, fine. Now, I'm expecting 75 basis points. I've always had it that way. Even after inflation, I was like, okay, maybe some people were pricing 100 basis points, but they didn't. They briefly did. 8% of the market briefly priced in 100 basis points. Then they changed their mind, and now we're sitting where we're sitting, with most of the market, vast majority of the market, expecting 75 basis points on November the 2nd. But that's not the important bit. The important bit is the meeting after that. So the meeting after that, you can see here that 50% of the market, nearly 50% of the market, are expecting a pivot. In other words, they're expecting that we'll see a 75 basis point meeting in November, but then they're expecting that in December, we're going to see 50 basis points. It will be our first pivot. Okay, so we're not tightening as aggressive. And this could be the catalyst for our move. And this is what could be moving markets today. This expectation that we could be pivoting. So coming back into the charts, we need to monitor this key level, and we've not got much space left in this triangle. Bitcoin has to make a decision. Either way, is it going to come down and break this triangle? We're coming to the apex, right? A handful of days and we're at the apex of this triangle. Are we going to break? Are we going to be heading to those lows of 17,600 and potentially much worse, right? The technical target from a breakdown here is scary. It brings you down to 14,000 and slightly lower even from this measured move. But the first point is, are we going to break this level, and are we going to head to our June lows of 17,600? Remember, June lows are down here. That wick down there, 17,600. Or are we going to break to the upside? And if we do, if we get a nice bounce from here and break to the upside, then we're looking for price targets up towards the first pivot point here at 22,400. Then you want to work your way up to this next level at 24,400. But then more excitingly is when we head up to our weekly chart and bring out the EMA ribbon. Our relief rally could take us well into our EMA ribbon, because remember, we form a big W pattern here. See, this will be your neckline, and eventually, on this relief rally, that's your way out. You form this W pattern at neckline, and you move to the upside. So that could give you a nice relief rally ranging anywhere between the 24,000 range all the way up to well into your EMA ribbon in 28, 29, even 30,000. But again, like I showed you on the dollar index, this would just be a relief rally. This would not be a change of trend. A change of trend and really moving into our next bull market is Bitcoin flipping the 30,000 level here on its weekly EMA ribbon and turning bullish, having a weekly close above that. Similarly for the dollar index, would you get that weekly close below your EMA ribbon on the dollar index? Then we're looking for a bigger move. Until then, all my talk is of a relief rally. So when I say relief rally, we're trading against the trend. So if I see a big impulse move, if I see a break out of this triangle, I will trade it against the move with a tight stop loss and clear take profit targets on the way to the upside. Because at any moment here, the bears can step in and push us back in, because that is the trend we're facing right now. We're in a deep bear market, so we have to give benefit of the doubt to the bears that they can flush us out, particularly when there's over eager longs trading the move to the upside. So there you have it, guys. That's my take on what's happening in the market, and that is why we're seeing a flip-flop market this week. But it has been a positive week. Bitcoin has held up okay at 19,000. It still hasn't needed to visit June lows of 17,600, despite the S&P doing so, despite the Nasdaq doing so, and despite various altcoins. Bitcoin has remarkably been holding up well here over the last few weeks. Hope you guys enjoyed this video. Don't forget to smash on the like button and subscribe if you want to trade any of these moves. BYBIT and BitGet are the places you want to be doing that. Also, don't forget to go watch my Algorand price target update video here. You're not going to want to miss that one. And I'll see you in the next one.